Tesla expected to release Q2 delivery numbers anytime now. Elon Musk signaled last month that the company was close to record numbers. At least that's what he said in some emails that got leaked. Phil LeBeau joins us now with more on that. And also wanted to ask you about the loss of this engineer, Hotel Dinger, and how important that is.
Who's going to Lucid? Andrew, we'll talk about that in just a little bit. And as Judge Smells would say in Caddyshack, well, we're waiting. We are waiting, as usual, at the beginning of the next quarter, the beginning of the third quarter, for the Q2 numbers from Tesla. And we've known for some time that they're likely going to be close to hitting the expectation of delivering between 90 and 100,000 vehicles. Let's see if they achieve that, how close they are to that. They've got some challenges in the third quarter, guys. Let's talk about what those challenges are. First of all, the second half of this year, a lower EV tax credit here in the United States. And remember, at the end of the year, that's it. It's gone. There is no more tax credit for Tesla buyers. There's the China auto tariff, which remains in effect as they continue to export vehicles to that country from Fremont, California. And as you mentioned, Andrew, the production executive, the VP of production in Fremont, who had been there for a number of years, Peter Holkenhinger, and I'm sure I butchered that name there. He has left. He has joined Lucid Motors. All of this, guys, is one reason why when you look at what's happened with Tesla estimates for the last quarter, look where they were in April before they had the Q1 earnings report. They were all the way up for full year earnings estimate expectation of $4.23. Boom. After that, it fell off a cliff. Barely expectation of profitability on May 1st. And now most analysts believe that they're going to lose at least $1.83 for the full year. And that's why, even though this number will come out, and they'll say, look, it's close to record, whether those records are full global deliveries or just in North America, which is a possibility. They'll say, look, we had record deliveries in North America or in a certain region. It's the margins that will be under pressure that people are going to be focused on when they report earnings, either later this month or early next month. But to your point, Andrew, when you have the VP of production in Fremont leaving, now there's a report today that the head of operations for Europe is out, has left the company. Put this all together. When you look at these executive departures, Andrew, a lot of these people are people who left maybe BMW or Volkswagen or another established automaker after a 10, 15, 20-year career. They go to work for Tesla, and they're there a relatively short period of time, and then they're out, either on their own or Tesla decides this isn't the right person for this job.
What do you think of what we're hearing so far, what the expectations are, and overall what you think is going on?
Yeah, I think it's a revolving door on the executive side. And I think it just speaks to challenges. We think Everest-like challenge that they're going to have, especially in the second half, hitting those numbers. I think QQ, they missed their guidance, in our opinion, in terms of units, about 85K. But it comes down right now. Profitability is going to almost be an impossibility for them as they go into 3Q. That's the issue for the street here as they go into the second half.
You know, the executive losses, there's been a turnover for a long time there. They've been able to muddle through and gotten by with that. You think that will continue?
I do. I mean, I think what's starting to happen is, I wouldn't say the clock struck 12, but you're really now starting to see from a demand issue, that's really what Tesla's facing. And I think fundamentally they're trying to do it while cutting costs. So you see in terms of Europe, what's happening in China. Right now, they're trying to balance a lot of things, and I think that's starting to have the pressure, not just on the fundamentals, but all comes down to demand and profitability, and I think that's investors right now, it's a glass half empty view.
Your price target is just above where the stock's trading right now, $230. So you think all of this has already been baked into the stock price?
Well, I think it's baked in, but what we're cautious on is potentially another leg down, specifically with that guidance number. I think they're going to have to rip the Band-Aid off and lower guidance for units for the year. I think that they could hit it, in my opinion, are wrong. And I think that fundamentally what we're looking to see in terms of demand into the second half, especially in Europe and China, which are lackluster.
Hey, Jeff, I know you look at this from a broader perspective of leadership overall. And I know you've been very concerned with what you've seen. I still come back to the idea, though, that Elon Musk is probably the biggest problem for Tesla, but also the greatest asset the company has.
Yes, it's definitely a double-edged sword. And I listened to some of the challenges that I don't know, Dan Ives or Phil would have coming on so frequently to talk about the Tesla story, and yet we never have to worry that they're going to be disappointed. because of what you point to is Elon Musk always guarantees there's going to be an interesting news story for them every day. And we consider what Musk does. You can list the D's. The demand saga is always very confusing. The departure issues are very confusing. The issues having to do with his regular delusions and distractions that he comes out with. The debt issues or the board's denial or this death watch that we have going. And by the way, I don't think we are looking at a company on the verge of death. I don't think that either Phil or Dan would say so. It's sort of like Mark Twain in 1897 saying the rumors of my death are greatly exaggerated. But there's something happening here, and there's a shell game that Elon Musk has going on, and every one of those D terms is a whole saga in itself. The demand is not going to be what we say it's going to be. There's debt coming up, about $500 million that's not covered this November, not to mention running out of cash end of the year. The demand, pent-up demand, Andrew used the term earlier this morning of a kind of a sugar high that we know that the lingering incentives and other reasons have led to perhaps they'll squeak through with some good numbers today or tomorrow when they drop down from the heavens. But by the end of the year, there's no way they're going to hit 400,000 vehicles.
Jeff, calling it a shell game is kind of a big charge. The people who have been shorts on Tesla have not seen this play out. When do you think things actually materialize, or is there a point where you can say he's a success or a failure?
Obviously, he's a genius, and we know that this is a board that considers him to be a genius. And yes, he can land a satellite on a small device in the ocean. He can take a rocket ship back in there. And yet we see it's disappointing on so many fronts. Even his solar city has dropped from #1 to #3. But these diversionary moves that he's going to come out with a chitty chitty bang bang type submarine car that we learned about the last time he went on with investors, or the insurance company, or we're going to have 1 million robo taxis this time next summer with no evidence, of course, at all to support that, or that he tells us at the end of the year, last year, December, we're going to have consecutive quarters of profits here on out. We see that didn't happen, as we have under $700 million of losses last quarter, and Dan points out that he's disappointed, so is everybody else. So these are diversionary moves. That's the shell game here. Not that he isn't a genius. Ann Wang was a genius with Wang Labs, and so is Ken Olsen with digital equipment. For that matter, so is Nikolai Tesla was a genius. He died as a penniless hermit in a hotel room, but he created Tesla himself. He created wireless and remote control and all kinds of things.
Jeff, I want to ask you and Dan, though, about what has been described now as a cash crunch. So we will get to the end of the year. There are cash payments where the cash has to go out the door. Is there going to be enough money to go out the door?
Well, I mean, they just raised on the convert, but in our opinion, they're going to have to go back to the market.
So you think there's another raise coming?
Yeah, I think in the next 9 to 12 months, they're going to have to raise probably another $2 billion.
What is the appetite among investors for that next raise?
Well, I think patience is wearing thin, and I think what you're going to start to see is that capital is going to come more at a cost. And
what's the cost? How does it dilute the shareholders? What's going to happen here? Is it going to convert? What do you think the setup becomes?
Yeah, I think the setup really comes, can they hit profitability second half? If they hit profitability, then that capital raise, that additional capital raise maybe comes off the table. But in our opinion, that's where that $1 to $2 billion of capital they're going to have to raise, probably another convert, because at this point, the issue is debt. The albatross around Musk's neck is the debt, $10 billion of net debt. And that's why what Jeff is saying, which is exactly.
All of those things in April, though. There was supposed to be all this debt that came due. There was supposed to be all this potential for issues that came up. And that
oh,
didn't
Becky,
materialize.
Dan was about to compliment me. Dan, go ahead.
Well, no, what Jeff's talking about is that the math doesn't lie. And I think fundamentally that's the issue, is that the debt is really what's squeezing Musk and Tesla, and that's why you're seeing these departures, because they're trying to have to do this. But also,
the departures are incredible, by the way. Nobody watching this show can name any tech company, any auto company, any who's had these kind of departures. If you go through the list of these, most of these people, they hardly stay a year or two. There's some 400 in the last 3 years. Every time I come on, I'm talking about the 50 who have recently left. You go through it, it's incredible. And they all left other great automakers to come here. And where did they go? To great other places. After a while, the board's got to ask a question. What is it behind all these departures? 60 of them already this year.
Many of them, they basically come, have a cup of coffee, and leave.
And you think it's just such a tough environment?
Because they are trying to do something that's almost impossible right now, where they're trying to grow demand. You look what you're doing in Giga 3 in China as well as Europe, and cutting costs at the same time, and that's the issue.
What do you make of all of the departures, Tim? I mean, we'll talk about the numbers in just one minute, because there have been departures. I mean, we get these headlines. It's almost like if it's a Tuesday, somebody's leaving, and yet it doesn't seem to affect the. I mean, the stocks moved around a lot, maybe in the same kind of volatility, but not in a way where people go, okay, there's a problem here.
Well, you go back to the beginning of the company 16 years ago, there's been a lot of churn in the executive ranks, especially when Elon Musk took over as CEO. So investors are kind of trained to expect some of this. And you look at the Fremont factory, and, this is a challenge. You have so much churn because making cars is hard, and you need to be doing it on a consistent basis. So you see the churn there, and longtime auto people get a little nervous. But here in the Valley, it's just kind of the same old for Tesla.
Okay, run some numbers for us this morning. What do you expect in terms of deliveries? But then I want you to run the cash burn on the company, because there are some payments that are going to come up towards the end of this year, early next. There's the China factory. There's a lot of money that's going to have to go out the door.
Yeah, absolutely. I think the Wall Street number, the whisper number, is in the 90,000 range. That would be the low end of the forecast from the company. The challenge here, as you point out, is that cash burn. Even if they hit that number, that's going to help cash burn, but the margins are going to be hit. You've got huge expenses and a huge wish list from Elon Musk. You've got a factory they're building in China. He wants to build a factory in Europe. And there's also this fact that they've got to increase the number of superchargers around the country, and they're facing challenges with servicing these vehicles and getting customers in to take care of problems that they have with these vehicles. So a lot of that costs a lot of money.
And in terms of that money, is there an expectation that there's going to be an additional money raise? Is that what's happening here?
Well, Elon Musk doesn't like to raise money, right? I mean, that was one of the issues for the past year, was his reluctance in saying, hey, I don't need to raise it, even though Wall Street was looking at the numbers and saying, hey, you're getting real close here, man. And you go back to the second half of last year, and there was this huge enthusiasm once he started posting quarterly profits on a consecutive basis. And he was talking about 2019 being just a blockbuster year, profits and positive cash flow going forward. And really, that's what, socked investors in the nose in the first quarter, with really much lower than expected sales, really raising this question of, is there the demand for this vehicle that investors have thought for the last 2 years or so?
Hey, real quick, Phil, I don't know if you're still with us. You with us, Phil? Phil may be gone. Real quick, Tim, do you think do you think that if he goes out to the market for additional money, given some of these costs and money that's going to have to go out the door later this year, that he can do it? Meaning, is there enough pent-up demand, maybe not on the sales side, but on the investor side, to still support all of this?
I still think that there is. I don't think that we're to the point where people are like, oh, God, this is a bottomless pit. We're just going to keep throwing money after money after money. I still think that there's enough support there, at least on the financial side, for bankers, investors to say, sure, we continue to believe in this Tesla.
A positive number greeted with more negativity. No analyst pushing it. Analysts all raising questions. One of my absolute favorites, Tony Seganegi, talking about 5 takeaways. He's at Sanford Bernstein. And believing that, I thought this was great, that Tesla has a shot at being profitable this quarter on a non-GAAP basis. I mean, that's the worst fear of the bears. Profitable quarter. But people, the average, I'd say, takeaway of this research is stock's going to go up, but it already ran up, fade the gain. And that's just throughout all the research. And wow, I think that there's a change here. I think that you got a very focused Elon Musk, who's not tweeting all the time, and people don't think there's any real change.
Well, we know he's not tweeting all the time. He does share some internal memos.
We're going to begin with Tesla. Shares are up big after setting new delivery and production records. Phil LeBeau is in Chicago with more on those numbers. Phil.
And Morgan, we've talked about this over the last 24 hours, how these numbers are record numbers and they have exceeded expectations. Let's put this into perspective in terms of where Tesla is in terms of deliveries through the first half of this year and where the company's guidance stands. Now, that red line on that last bar there, they've delivered about 158,000 vehicles so far this year. They've said they plan to deliver 360, so they've got to come up with 200,000, a little over 200,000 deliveries in the second half of this year. This report left something for both the bulls and the bears to jump on. Let's start with the bulls. They say, first of all, order backlog was growing in the second quarter. That's according to Tesla. That's proof that there's not a demand issue here. Also, the company's guidance has not been lowered. The bears counter that by saying, yeah, but they didn't reaffirm guidance. They could have done that yesterday. They did not do that. Also, there were details regarding these deliveries that were lacking in terms of how many went to China, how many went to Europe, a few other details that people would like. And they also point out that the margins are likely to be under pressure when the Q2 financials come out later this month or early next month. And that's why most of the analyst reports today, guys, if you had to summarize it, it basically comes down to this. The analyst reports essentially say these are numbers that support the idea that you can lower expectations for the second quarter, but full year numbers, you've got to hang on to whether or not you buy into them being lowered from where they are right now in terms of the loss expected.
Phil, thank you. Joining us now, Elevation Partners co-founder and early Facebook and Google investor, Roger McNamee. Roger, great to have you on.
Morgan, always a pleasure.
So what fascinates me about Tesla is it is run by a man, Elon Musk, who thinks very, very long term. He is a long-term visionary. And yet, when you look at this company, when you look at the financials, from an investor standpoint, it's very short term. It almost seems quarter to quarter. What do you think of these latest numbers?
Well, Morgan, these are obviously fantastic numbers. I mean, after the March quarter, there were legitimate concerns about demand and essentially the viability of the viability of Tesla because it has such a high valuation.
We're getting there, don't worry.
Yeah, exactly. Expectations were so high, right? And let's face it, this is one of the great brands created in the last 50 years, right? I mean, people love the cars, people love the brand, and you've got a CEO who's distracted by another incredibly cool company, SpaceX, and that, I think, caused really legitimate fears. This quarter doesn't solve anything, but it is way better than what people were expecting. And as a consequence, buys the company time. To me, though, it still comes down to this issue. This is the car industry. They've got to be really good at manufacturing. They've got to be better at forecasting, and they've got to learn how to make money making cars at this kind of volume. And I'm really hopeful that they'll get there. But, as an analyst, I don't think we know enough yet. But this is so much better than what we were thinking just, a few weeks ago that I'm personally relieved.
Yeah, I mean, you mentioned SpaceX. SpaceX has a COO and president, Gwen Shotwell, which is, I think, a big contribution to that company's success. Are you surprised that Tesla still doesn't have somebody in that position?
I just don't get it, right? I mean, I look at this and I go, why is this any different than any other car company or, frankly, any space company? I mean, these are really hard engineering businesses that require tremendous discipline because people's lives are in the balance. And it's super, super important, as we saw with the case of Boeing with the 737 MAX, that you really need to have attention to detail, top to bottom, and you need to have predictability in your manufacturing processes. And I think Tesla's getting there, but it's getting there in a way that just, I think, causes investors an awful lot of heartburn. And candidly, just me as a fan of the company, it feels like it's harder to get there than it should be.
Roger, I spent a lot of time looking at autonomous vehicles down in San Francisco, especially when it comes to Waymo and Lyft and Uber. When we talk about the long term, where do you think that Tesla ranks here? There's been some skepticism about where it actually is in that competition to get there.
Yeah, Deidre, I got to be honest with you. I remain skeptical about the timing on autonomous vehicles. We've learned over the last 50 years with ships and aircraft that if you want to be safe with an autonomous vehicle, you want to give it its own lane for driving so it doesn't run into anything. And then you want to put beacons on everything that doesn't move so it doesn't hit them either. And in my mind, the notion that we're going to do self-driving cars with all of the intelligence in the car, and we're just going to figure out everything as we go along. That will work eventually, but I just think that the process of getting there, of making it secure, is going to be incredibly fraught. And I worry a lot about pedestrians, I worry a lot about passengers, and I just think all of this is going to take longer than investors are currently expecting. And so, in a sense, from Tesla's point of view, whether they're part of this or not, they're going to have to just make sure they survive as a car company. And, they're going to have to just learn how to manufacture, because it's not like self-driving is going to bail them out.
No, but Roger, why would they be a part of it? I mean, they've already got semi-autonomous functions in the car. A lot of the drivers of them actually love that, and they're recording every single mile. I mean, the key, as you well know, is data, and they're certainly taking in a lot of it every moment of the day, given how many automobiles they already have on the road.
No, David, I'm completely with you on that. I'm just saying that we've seen, a small number of examples of the failure modes that you can have in a Tesla in the self-driving domain. And I'm just looking at this and thinking to myself, I don't see them being any more secure than anyone else, simply because they're using the same approach, which is to say, putting all the intelligence in the car. Yes, you gather a ton of data, but the reality is, as we all know, when you're driving, things happen. Anomalous stuff happens. It's not, it's not about being right 99% of the time. You got to be right 100% of the time. And the liability around that, I think, is going to turn out to be a real issue if there are, or let's put it this way, when there are accidents.
Right. So, Roger, are you saying, though, that autonomous driving technology may not be essential for Tesla in the long term in the same way that it is for Uber and Lyft?
Sorry. No, I actually think Tesla's much better positioned than Uber and Lyft. And of course it's going to be essential, because eventually we are going to get there. What I would really rather see is I'd rather see the country invest in autonomous to create, specific lanes for cities like New York, to experiment by taking an avenue and dedicating it to self-driving buses and self-driving, vehicles. And that sort of thing, where you have real density, I think makes a ton of sense. Whereas I think this notion you're just going to throw them out in the streets of Phoenix, that may work, but I don't know. I've talked to too many engineers, and I just feel like there's a lot of risk in that we're not factoring in right now.
Yeah, and certainly a big part of all this discussion when you're talking about data and this new technology is that as of yet detailed auto insurance product that Tesla says it's going to be rolling out too.
Never seen a positive number greeted with more negativity. No analyst pushing it. Analysts all raising questions.